GGPI merges with Polestar this week, and I thought it would be a good opportunity to look at the EV space and determine its level of attractiveness, not only just for Polestar, but for the competitors. So what do I define as attractive in the EV space? Well, of course, valuation is always number one, but with the EV space more specifically, execution is really important, and we've really heard this from Elon Musk several times, especially when he's called out Lucid and Rivian for their potential road to bankruptcy. So that's what we're going to take a look at today. If you're new here on this channel, my name is Bill Hawk, and we talk about stocks, crypto, real estate, anything relating to investing and making money. If you enjoy the content and if you receive some value, I'd really appreciate it if you hit the like button and subscribe. It really helps me out with the YouTube algorithm, and it helps me stay consistent and reach more people. So let's start with Polestar, since that's the upcoming SPAC merger. I know it sounds like a stripper name, but aside from the obvious, it's a sub-brand of Volvo, which is now 100% owned by Geely Holding Group, who previously bought the brand from Ford. And although Geely Holdings is a Chinese company, the brand itself is Swedish. However, as you probably guessed, most of the production takes place in China, in its Chengdu factory. At the moment, they have two production models, the Polestar 1 and 2. Very original, I know. But they also disclose plans on SUV versions 3 and 4, and even a premium flagship of the Polestar 5, which looks pretty good in my opinion. Before we dive into the numbers, let's take a look at the competition. So who is the competition? Well, of course, Tesla, but I'm going to name a few others like NIO and Lucid, who are more in the startup phase, and also Chinese peers like NIO and Xpeng. And the reason why I separate the Chinese is because I do believe they're pretty much leaders in this space, and even in terms of adoption, you can see most of the EV sales right now worldwide are going to China, and I think they're actually doing a really good job, and for once they're not copying, they're actually leading. Lucid is led by Peter Rawlinson, who joined in 2013 and right now the CEO of the company. He's also the Model S's chief engineer under Elon Musk. It's safe to say that Lucid cars look a lot better than Tesla in my opinion, and the tech is arguably better, but that doesn't mean that they're going to win this race, because like I said, there's a lot to scaling EVs. Their only production model right now is the Lucid Air, which has different trims, but it's a luxury model. They'll be dropping a Lucid Gravity SUV soon. Although it's an American headquartered company with its gigafactory in Arizona, it's noteworthy that Saudi Arabia's Public Investment Fund, or PIF, holds a 61% stake in Lucid. That's also why the company is constructing a factory there to serve the local market. I don't suspect that there's going to be any demand issues, but likely supply chain issues. Rivian is another competitor, which is really interesting. I've talked about it actually extensively. I've done a video on it, which I'm going to link above so you can check it out. But since then, they've actually experienced scaling issues with productions, and they had to cut their guidance by 50% for the year. So that's something to note going forward. So now let's get into the Chinese competitors, NIO and Xpeng, starting with NIO. NIO sales were actually down year over year in April, but this was self-inflicted because of the Chinese zero COVID policy and lockdowns, which really impacted their not only supply but also demand, since most sales are going into China. What I find really interesting about NIO is their battery swapping service, or battery as a service, which they seem to be going all in with. Basically, as a user or a driver, you're not driving up to a supercharger station to charge your batteries. Instead, you're just going up and they're swapping your batteries, which apparently takes less time. So this is really interesting, and I'm curious to see if it worked. Tesla apparently tried it in the past and it didn't work out, or it wasn't feasible, so Elon Musk abandoned it. So I think it's worthwhile considering this as a bet if this is the future of EV. The question we don't know is whether this is all scalable. Finally, another successful Chinese EV company is Xpeng. They started much smaller than NIO, but they've recently caught up in terms of deliveries. Their P5 and P7 models are leading the way in terms of their good looks, of course, but what's even more impressive is that they are working on a flying car for delivery by 2024. I'm just going to ignore that for the purposes of my valuation and forecast, of course, but it's really cool, and that's an interesting wildcard play on Xpeng as well. Alright, so now let's talk numbers. Now, first of all, this spreadsheet is available to members of my email list and Discord. The links are down below. I highly recommend you sign up and join, because then you can play around with these numbers and make your own assumptions, and should you choose to invest, of course, you're going to have higher conviction. So I'm going to go over things like revenue, net income, or margins, and you can see here additional perspective on margins from the Polestar presentations, deliveries, which is really important, and of course valuation, which is arguably the most important. So let's start looking at the revenues between Tesla, Polestar, Lucid, Rivian, NIO, and Xpeng. So you can see from a compounded annual growth perspective, Polestar, Lucid, and Rivian present the highest upside in terms of revenue, but they also come with the highest execution risk. So for example, Tesla has the lowest upside in terms of revenue growth, but of course they have the lowest risk because they've proven so much execution already. So we can see this further when we take a look at deliveries. Now, Polestar from these newbies, let's call them, between Polestar, Lucid, and Rivian has delivered nearly 30,000 based on their investor presentation, which in my opinion reduces the risk significantly. So if I were to pick within these up-and-comers with the highest growth potential, Polestar, Rivian, and Lucid, you're taking a very high-risk bet, of course. I would try to lower my risk and go with Polestar based on these three. Now, of course, Tesla is on its own league, which you can see here, they're based on deliveries, and that's why looking at deliveries is so important, because you can see where they're potentially having issues with scaling. Tesla has done a phenomenal job in terms of scaling, and I know this is only from 2020 to 2021, but I'll also link my Tesla analysis in previous video, and that spreadsheet again is available to members of the email list and Discord. But you can see they already had nearly 1 million deliveries in 2021, 1.4 million for 2022, but I know we're gonna have some issues with production right now with Shanghai lockdowns, which you can see already is an issue with NIO and Xpeng. Based on the updated run rates up until May of 2022 for both NIO and Xpeng, I expect them to stay relatively flat. NIO appears to be having more issues with scaling and production than Xpeng. Xpeng, I'm still expecting them to have 30% growth in terms of deliveries. But overall, because NIO is investing more on capacity, so in 2024, they're expecting or aiming to get to 600,000 vehicle capacity in terms of production, whereas Xpeng is currently building 400K capacity. I would say there's probably more risk for sure with NIO, but you can see here you're compensated with that higher upside. Now, I just took 50% of their capacity, well, 200K for 2023, and then 50% of the capacity. Because there's higher risk here, I'm not willing to go much more than that for 2024. So again, NIO and Xpeng, you can see they're doing really well compared to Tesla. Now, of course, this is a drop in the bucket for Tesla, but my point is really that Chinese EV manufacturers are doing really well. Now, there's one big wild card here, which I'm not including, which is BYD. That's a Warren Buffett stock, and I really believe that they can give Tesla a run for their money should there be no tariff issues with regards to importing Chinese vehicles in the US. So again, I'm going to cover that potentially in another video. I'm also excluding another EV manufacturer, Fisker, which hasn't yet developed vehicles. So before I get to valuation, I'm going to take a look at the margins. And that's really important because it displays to me who's being efficient and who's burning cash. Of course, I don't want to be investing in a company that's just burning cash, although most of these are doing that, with exception to Tesla, of course. It's almost impossible to compare Tesla to these up-and-coming ones, which is why I think it's important to really compare Tesla to BYD, if that's even going to be a comparison. But that I want to find out in another video. So in terms of margins, first of all, Polestar, they appear to be and forecasting projected margins based on their investor presentation to be hitting margins equivalent to Tesla in 2024. I honestly think that's super optimistic, and I am not going to be making my investment based on that assumption because I've seen how difficult it is with these other manufacturers. It's just really optimistic. So again, I'm very cautious with Polestar's projections. These projections, the rest of them, are based on analyst estimates. So based on these forecasts, again, it appears to me that NIO and Xpeng will reach profitability by 2024, and based on what I'm seeing, and I've looked at historical data past 2020, you can see they're actually trending closer towards that, and I do believe in that. I do believe that they're going to be reaching profitability. But of course, again, I just want to point out these are Chinese manufacturers, so if you have anything against that, which I don't blame you if you do, given everything that's going on right now, then that's something to be aware of. Finally, let's take a look at valuation, which is probably the most important thing. Now, you would expect that Tesla, given all the hype and headlines it gets, is the highest valuation, but it's actually not. In terms of price to sales, and that's the only thing I can use to kind of benchmark these all because it's going to be too difficult to do otherwise. But again, you have to factor in the margins, which is why I looked at margins separately when you're looking at this analysis. So automatically, you can see the valuations for Polestar, Lucid, and Rivian are much higher when we take a look at 2022 in terms of the benchmark for price to sales, but it does get lower in 2024. But you're taking a huge execution risk, and that's something that I just personally don't feel comfortable with right now, especially in this environment. So it's just like you're assuming 2024 is going to be exactly the way it's projected. In that case, of course, yes, they're cheaper than Tesla, but when you take a look at the risk you're taking to get there, it's not so attractive in my opinion. But I do like Rivian, given that they have the Amazon partnership and the deliveries with vans. I think they can do well. Lucid, I think their cars are beautiful and they have a better tech. So again, it could work. Polestar potentially mass market, but you're taking big bets, and I would reflect that in my allocation should you choose to do that. It's just something that I'm a little cautious of right now. But in terms of valuation, as you would expect, these Chinese names are actually quite attractive. Now, Chinese equities have performed really well year to date. They've taken a beating before that, but right now they're actually rallying, and it's quite interesting to me to take a look at NIO and Xpeng and potentially BYD, which I'm going to take a look at separately again on another video. But this is where you might want to take that bet on Chinese EV manufacturers, because I think they are doing really well. Now, of course, you can go with Tesla, and that's the lowest risk, but you're probably taking the lowest upside in my opinion, because a lot of their upside is priced in. And that's where I find these names a little bit more attractive. If you were able to read me throughout that analysis, then you probably already know what my concluding thoughts are going to be. But if you don't, let me give you the quick summary. So Tesla is the undeniable king, lowest risk. There's really no competitor to Tesla. But again, potentially the lowest upside, because much of that is already priced in. The one thing you want to be cognizant about when investing in any EV pure play is that right now they're being valued as tech. Now with Tesla's margin, it's pretty easy to argue that, but we're going to find out right now when the economy potentially goes in a downturn and what that cyclicality looks like, because traditional automakers are of course going to experience that based on what we know from history. So that's why I want to take a look at Ford. Ford is on their way to producing roughly 100,000 vehicles per year right now in terms of EVs, and they're aiming to produce 600,000 EVs by 2023. So when you take a look at their valuation, a PE of I think 3 or 4, it's ridiculously cheap. If we take their EV business, so let's assume 600,000 EVs by 2023, then 75% of their market cap of 40 billion, 30 billion of that, if we apply an EV multiple or EV pure play multiple, goes to that business. That means 25% of their market cap is on traditional ICE vehicles, which is insanely cheap. Like, that just doesn't make any sense to me. So just for transparency, yes, I am a Ford shareholder, but you got to remember that it's not as simple as investing in them because it's a low valuation. You're also fighting against the trend of ICE vehicles, so they're losing market share on that area, but you're assuming that they're going to get market share or be able to convert their business into EVs. That's a fair bet to make in my opinion. From what I found in doing this analysis, if I'm personally going to be investing in any EV pure play, it's going to be in China. Now, I understand that a lot of you just don't want to touch China because it's just toxic and you don't know what the hell the CCP is going to do. Now, I get it. I'm from that camp as well. But if I'm willing to make an exception, it's going to be for EVs because I can see that they're actually leading the way. Now, with NIO, you're taking that wild card bet of battery as a service, and with Xpeng, you're taking, well, the flying car. Now, there's also BYD. This Buffett-backed company is doing amazing things when it comes to deliveries and also vertical integration, which the only other person doing that or player doing that is Tesla. So I know I've compared them to Tesla about 100 times in this video, but I hope you liked it. Otherwise, I just find Chinese EV plays a little interesting given that they're working double shifts to get out production, whereas we're unionizing. So I mean, that says a lot. Anyways, I hope you liked this video. I hope it deserved a like and subscribe from you, and I hope you join the Discord and the newsletter, which is linked below. I hope to see you on the next one as well.